Friends, welcome back to another episode of Price Action Trading with Bank Nifty. Today, I'm going to talk about how to trade reversals. Pay very close attention because this will help you make money very soon in the future as well, and if you apply it correctly. So, as we are all price action traders, and the instrument we have chosen is Bank Nifty because it is our favorite instrument, and the time frame we choose is 5 minutes because it's the best time frame to give you enough time at the close of a bar to think and plan your trade. So let's talk about reversals. There are three rules for trading reversals. So what is a reversal? A reversal is that we have a trend, either an uptrend or a downtrend, and once the trend finishes and reverses, only then we trade the new trend. So if you are in a bullish trade, there is a reversal, and then we will go and trade in the bearish direction. Now, as price action traders, there are three rules which determine how to trade a reversal. Let's see here how we could have done and use that, especially today, to make a lot of money. So, rule number one, as we can see, Bank Nifty is in an uptrend from 19th of April till here, and we went back and saw the long-term lines that it kept on respecting this channel. So here we had some expectation either it will break out and just go up, or it will reverse. And when we come back to our 5-minute charts, we just look at this particular price action because we can see a very clear uptrend and the downtrend, this uptrend and this downtrend finished here and the uptrend begin here, right? So now we have to see whether this uptrend has finished and reversed to a downtrend, and what could have been the precise point where we would have got this confirmation to trade the downtrend. Okay, so pay very close attention. I will explain to you how to go on this step by step. Rule number one, step number one, most important is whenever there is a trend, we draw a trend line and wait for the trend line to be broken. So as we can see, Bank Nifty is in an uptrend since the 19th of April, and this particular uptrend from the 26th of April, let's do one thing, we'll draw a trend line. So this looks like a good trend line. It took the support here, it bounced off and then it broke. So rule number one for trading reversals is there should be a break of the trend line. So here we can see on the 30th of April that this trend line broke very strongly. Is the uptrend finished? No, not yet. But only the rule number one, that is the break of a trend line, that rule has been satisfied. Now, what is the rule number two? The rule number two in price action is after this trend line is broken, the price will go back to test this high. It will test it in three ways. Either it will be the same high, or a lower high, or a higher high. Keep this very important. So rule number one, a trend line has to be broken significantly, that we have achieved. This rule number two, this high has to be tested with a same high, higher high, or lower high. So yesterday nothing happened. Today we saw that we open with a gap up. The price rose in the first bar and even in the second bar. So here condition number two is almost meeting, that we are trying to achieve another testing of this high with a lower high. Okay, so condition number two is already in progress. Whoever was trading at 920, he would be very careful to see if we can trade a reversal if the conditions are satisfied. And you can see that this high, instead of going here, this high closely matched today's high, closely matched this point. Okay, so it is kind of forming a lower high. You can say that anybody who was looking at the chart at this point, let's say the market opened, we have a strong bullish bar at 915 to 920. The second is a continuation bar. After the small flag, the price moved ahead, and we could assume that the price will go all the way till here to test this high. But what happened in the third bar? The third bar, there was a pause. We were very happy this is a pause. This is actually a bullish flag. After this, the price has to zoom up again. In the fourth bar, this particular bar was the third condition that we will see a good reversal bar, which will tell us that this high has been tested with a lower high, and now we will see a move towards the downside. So the three conditions are break of a significant trend line, a testing of the same previous high, either a same high, a higher high, or a lower high. So here the conditions were apt that this high would be either it would finish here, it would finish here, we don't know. But we will wait for it to test here, and then there will be a third condition which we have to look, which is this particular bar, which is a strong reverse bar. So this price reversed this bar and this bar. So this gave us a clear indication that this uptrend which we had seen from the 18th, 19th of April is in danger, and we have tested this high with a lower high, and this bar, big bar of 70 points has formed. So we can expect some downward action. So any smart price action trader would have taken his first trade after the breach of this low to the first target of meeting the moving average. This moving average, normally in an uptrend, the price will come here and bounce, but it broke very cleanly to the through the moving average. So we were very sure that the uptrend has finished. Condition 1, the uptrend channel, uptrend bar, uptrend line, the trend line has broken. Condition 2, we are testing for this high, either with the same high, higher high, or lower high. The third is this reversal bar. After this reversal bar, we were very confident that we will see some downward action. So you can see from here all the way till here, price paused. There was a sudden buying to reclaim the moving average, but in the next, this bar and this bar, it just fell through again. So we are very sure now that this uptrend that we saw in Bank Nifty is in danger. More or less, I am now confident that this uptrend is over and we have in a downtrend. If you want to prove what is the simplest definition of a trend, an uptrend is higher highs and higher lows, and a downtrend is lower high and lower lows. So we can see here this high is lower than this high, and these lows are lower than these lows. So we have a lower high and lower low. So we know that the price is now going into a downtrend. So this are very important conditions. First, to trade a reversal, wait for the significant trend line to be broken. Don't jump the gun. Wait for the second condition, that this high has to be tested. The price will keep trying to rise and meet this high. But the third condition will come when this uptrend to test this high will be met by a strong reversal bar. Once that reversal bar kicks in, the three conditions have been met. So we can be confident that we are now into a downtrend and this uptrend has finished and reversed. So this is how, my friends, we have to trade reversals. Don't trade a reversal on the break of the trend line, because the price will keep jumping back to test this high. Don't trade the reversal or expecting that this bar will finish, this bar will finish as a high. Only when the third condition of the reversal bar, this one, is met, you can be reasonably sure that the uptrend has finished and now we are into a downtrend. Thank you. That's all for today. Please leave your suggestions and questions in the comments. I will be more than happy to answer them. Thank you.